Welcome to Sand Compounding. This is Sandeep Anand. I'm going to explain what is the importance of understanding local markets when it comes to investing. Understanding local markets is a key thing because each markets are different. When I say markets, I'm talking about different countries. If you're planning to invest in China, it's a good idea to understand the landscape of how the investments have turned out, how they work, what is the cultural adaptations with these local markets. So it's very important to understand the local markets. And it seems Phil Fisher, the legendary investor author, has said, like, it seems logical that even before thinking of buying any common stock, the first step is to see how money has been most successfully made in the past. And this was picked up by me from the famous Motilal Oswal's investing powerhouse in India, who has carried out 24 years of wealth creation studies based on this key premise. And this premise is like to indicate and show and doing this study by seeing how the money was made in the past and how the money was made in which sectors in those countries. And according to Ramdev Agarwal, the co-founder of Motilal Oswal Group, who has done these wealth creation studies, they have clearly indicated that this is the guidepost when they do the analysis and when they do the wealth creation studies. And why so? Because every country has its own business dynamics, growth maturity, status of development, economic demand, supply gyrations, which could vary between the countries, inflationary status. For example, what does all this mean is like the business dynamics could really vary from a country like United States, which is far matured and developed, to a country like China, which is almost maturing, or to a country like South Africa, which is in the emerging economy market. Inflation would be very high usually in growth markets or in emerging economies because of the development that's happening. And for mature markets, it's usually deflationary or disinflationary that is applicable. That's one of the factor. Similarly, multiple other factors come in, and it is very important to understand different flavors that play in together. What works in one country might or might not often work in other countries. Example, the growth of middle class led consumption in China created lots of consumer brands. Example, Haier, which went to become the largest consumer durable producer in the world, and Tencent, for example, which gave stupendous returns in Chinese market with the gaming industry. But that might not be the case in a African nation or in other Asian nations which are in the emerging stage. For example, in countries like India, the consumer durables are deeply underpenetrated into households, and there is a huge market lying out there, and the firms are just scaling up to play the boom. Now, investing is all about narratives, and they gyrate between countries, and so it's important to understand the narrative underlying or underpinning the local markets. And some of the government regulatory policies might needs to be understood, which could impact the companies, how they operate. Some countries have very closed markets, some of them have very open markets, and the level of bureaucracies and regulatory hurdles also play a lot of factor in investment ideologies. Consumer behaviors are highly driven by the local culture. So culture plays a big role in investments and in business successes. Example is classic one in China, why Amazon could not capitalize in China against Alibaba or others, and that's why you have an Alibaba today. Whereas Amazon was able to capitalize in India because they could well adapt to the cultural trends and cultural behavior of Indian communities. And there can be more as we analyze individual companies. So this is one of the key tenet I wanted to bring out, because understanding local markets, the cultural adaptations, and how different businesses have fared in the past and how they will do in future has to be looked upon. So hope this was informative. Thank you.